Hey traders, welcome back to the weekly Forex Forecast. Going into next week, US stocks are on the verge of a major breakdown. The risk of this happening is real. And this is important for Forex trading because if this materializes, we are going to be seeing risk-off moves in the Forex market next week. So I only want to be focused on risk-off setups once again this week. I have been warning since the end of September about a potential volatility shock, and the risk of this taking place over the next 2 weeks is very high. Okay, so if we have a look at the scores for the coming week, you can see the Swiss franc is once again the #1 long play. And the Swiss franc was highlighted as the best opportunity last week, and the Swiss franc pairs performed fantastically from last week's video. Heading into this week, you can see the setup is basically the same. We do have the Swiss franc and the US dollar at the top of the scorecards, with the yen, the Aussie, the New Zealand, the pound and the euro right down near the bottom. So once again, going into this week, the plan is essentially the same as last week. Why? Because I'm only interested in trading risk-off setups. Once again, that is Swiss franc and US dollar long plays. And I'm going to be filtering Japanese yen short for the same reason I did last week, which is that if we get a volatility shock, if stocks start to break down in any meaningful way next week or the week after, we are likely to see a flight to safety in the yen. I do not want to be on the wrong side of it. So once again, going into this week, I am focused on Aussie, New Zealand, especially versus the Swiss franc to the downside, and also Aussie and New Zealand versus the dollar to the downside. And on top of that, I'm also once again going to be looking at the pound and the euro versus the US dollar and versus the Swiss franc. Okay, so let's have a look at the markets themselves, starting with crude oil. Crude oil poses the same dilemma this week as last week, which is this. In a risk-off event, crude oil will be hammered. However, because of the ongoing situation in the Middle East, this actually has the ability to cause a spike in crude oil as well. So there are catalysts that could actually cause either a spike in crude oil or a sell-off in crude oil. It makes this not an attractive asset to be short-term trading next week, in my opinion. However, on balance, if I was going to be trading this, and I probably won't, but if I was, then I would be looking really, I would say, only at long positions. So any pullback in this market is viewed next week as a potential opportunity, albeit not a fantastic one as it currently stands in my opinion, to look for intra-week breakouts into the 95 handle and this previous high over here. Or the second place I would be looking for those of you looking to trade this asset next week would be from the 84 level. This is where I'd be looking for a short-term buy opportunity if we trade into this area in crude oil next week. Moving on to the Forex pairs, Aussie franc is once again going into next week my favorite opportunity to the downside. This was a market that performed fantastic last week. It was highlighted as one of the best opportunities in last week's video. So once again, any pullback in this market is simply viewed as an opportunity like last week to look for an intra-week breakout to the downside down to the 0.5560. And of course, all of these setups here are risk-off setups. If we see a bigger breakdown in stocks, all of these should benefit from that, and we should avoid being on the wrong side of any big sell-off in stocks next week or the week after, simply by trading the risk-off setups that we have here. The second place next week I would be looking for opportunities if we can pull back and test the 0.570. If we fail to break out, so we just bounce and we just continue to correct and there's no breakout to the downside, the 0.570 is the second place next week I'd be looking for a short-term sell opportunity in Aussie franc. Next is New Zealand franc, and this was another really nice market highlighted to the downside last week. Once again, any pullback in this market is simply viewed, and look at this momentum to the downside. Any correction here is viewed as an opportunity, a gift to start to look for potential breakouts intra-week down to the 0.5120. Or if we continue to hold this trend, pull back and test the 0.5270, this is the second place I would be looking to essentially sell the rip in New Zealand franc next week for a short-term sell opportunity. Next is pound franc, another market highlighted in last week's video which performed really, really well to the downside. Any continued pullback is viewed, and you can see, look at the momentum in this. Here's the correction, and notice how we had the momentum last week from this breakout. This was something that was highlighted, this kind of consolidation. A little bit of a descending triangle pattern, this is kind of known as. We get the momentum precedes price, we get the pullback, and then we sell off. Exactly the same again, we've got this momentum, pullback, and this is a market, once again, I'm going to be looking for potential breakouts to the downside into, if we get these opportunities, the 1.0750. And if we hold this and we bounce and we bounce, we pull back and we start to retest the underside in this area, the 1.0950 is the second place next week. I'd be looking for a short-term sell opportunity in pound franc. And the final franc pair here is Euro franc. Now, just bear in mind that we do have an ECB decision next week, an interest rate decision out of the Eurozone. So the Euro pairs are unlikely to do much leading into this. And in fact, if we start to get Euro franc testing its upper bound, Monday or Tuesday, this could actually set up a really nice opportunity to range trade this, just short it before the interest rate decision and be out by the interest rate decision. Why? Because very often markets will hold these ranges before big news events. You don't really see big directional moves before these interest rate decisions. So if we get a pullback and test the upper bound, even Monday or Tuesday, this should give us a nice opportunity before the interest rate decision itself. So any pullback is viewed as an opportunity to look for bearish breakouts, but bear in mind it's unlikely to significantly break out before the interest rate decision. So on the interest rate decision, if we break down, that's going to be the opportunity. We break down, we pull back, and then we get this follow through after the interest rate decision into the 0.9380. Or if we hold this range and we pull back beforehand, the second place I'd be looking for a short-term sell opportunity, especially if we come back and test this high, is going to be the 0.9520. This is the second place next week. I'll be looking for a short-term sell opportunity in Euro franc. Just bear in mind with the Euro pairs, that ECB decision next week. Moving on to the dollar pairs, and these were markets highlighted in last week's video, but we just kind of consolidated. The dollar didn't do much. And notice, I do think that this really proves what we were looking at last week in terms of the Swiss franc being not just strong in the scorecards, but getting stronger, and therefore highlighted as the best opportunity. And the dollar, which although it has absolute strength, is actually peaking in the scorecards. We saw that red arrow earlier on when we looked at the scores, suggesting that we're in a larger consolidation. So although we should be looking to be bullish, you can see this market kind of lack momentum, and it may take a little longer for the dollar to continue its breakout to the upside. That is why going into next week, I do like the dollar, but only second to the Swiss franc pairs once again. So any pullback in this market this week is simply viewed as an opportunity to look for an intra-week breakout down to the 0.620. And if we hold this and we just continue to trend higher, just trend higher, perhaps even pushing through this and testing the high over here, this is the second place next week. I'd be looking for a short-term sell opportunity in Aussie dollar. Next is New Zealand dollar. Now, this is a market that has really started to break down, and I do think we're going to see further declines in this market. Any pullback in this market is simply viewed as an opportunity to look for this kind of breakout in the direction of the trend that we're looking at here, and then a sell-off into, a follow-through into the 0.5730 area, you could say. And also, if we hold this and we continue to pull back and we test these highs here, this would be another really good place. See, we've got a high here and a high here. If we push into this zone and we test potentially even both of these, that's going to be a great place next week to look for a short-term sell opportunity in New Zealand dollar. Next is pound dollar. Now notice pound dollar and euro dollar are not highlighted in gold. That's because in the event of a risk-off move in stocks, commodity currencies will suffer the most against the Swiss franc and the dollar. The pound and the euro will also move down against the dollar and the Swiss franc if we get risk off, but it's the commodity currencies that get hammered the most. And these are not just commodity currencies, but they are rated as the best shorts anyway heading into next week. So a really nice setup here because we can trade risk off based on the fact we would be trading this anyway. And at the same time, if we get a bigger breakdown in stocks, those setups will benefit. So it really is a nice setup going into next week. Any pullback in this market next week is simply viewed as an opportunity to look for bearish reversals down to the 1.19750. And if we hold this and we pull back, and especially if we come up and test this high, and this turns into a big A, B, and a C, and we test this high over here, this would be a great opportunity in this area at this other high over here, this previous high, to start to look for a near-term short opportunity in pound dollar. And the final dollar pair is euro dollar. Now euro dollar isn't as appealing to me as the other markets next week because we have that interest rate decision. So it's unlikely to do much heading into next week. However, if we get the interest rate decision and we start to see this correcting beforehand and then we break down like this, probably halfway down towards the target and this low, that's the opportunity to look for a pullback after the interest rate decision, maybe even the day after, for a near-term short into the prior low and the 1.0460. So because of the ECB meeting later on in the week, I do prefer Aussie, New Zealand, especially versus the franc, and then the pound versus the dollar and the franc. But I'm also going to be keeping euro dollar, euro franc on my radar next week. And the final Forex pair we're going to look at is CAD Frank. Now, why look at CAD Frank? Because when we look at the scorecards, the CAD is kind of bullish to neutral and the franc is kind of bullish. Why trade two kind of bullish currencies when we can trade, something like the Aussie or the New Zealand versus the Swiss franc? Well, we have an interest rate decision out of Canada on Wednesday. So I'm really looking at the CAD Frank setup here purely after the interest rate decision comes out. CAD Frank to the downside is also risk off. So what I want to see next week is if we get a negative reaction from the Canadian dollar, the Swiss franc is going to be the long currency that I would like to short the CAD against. In other words, my favorite pair would be CAD Frank to the downside in the event that we get a negative reaction from the Canadian dollar or we get a dovish rate statement or even decision. So this is purely going to be after the BOC. It's an interest rate decision setup. We may not get it. If we get strength from the interest rate decision out of the Canadian dollar, I'm just going to leave this altogether. This is purely if we get weakness from the Canadian dollar. Any pullback in this market would be viewed as the opportunity to look for a bearish reversal. So I want to see this basically correcting, consolidating, maybe even pulling back into this area, and then a sell-off on the interest rate decision itself. The market is unlikely to do anything between Monday and the interest rate decision, so just bear that in mind. But if we get the interest rate decision, we get the sell-off like this is going to be the follow-through setup I'm going to be looking at to the downside in CAD Frank next week, down to the 0.6440. Okay, so wrapping up the video with gold and silver. Both gold and silver did rally last week, and gold was a market highlight to the upside last week after getting that flight to safety, that risk-off move on the Friday over here. That was the sign, look, we need to close and reverse this, even if we're going to take a small loss as I did on this market during that Friday. This is something we need to get out of and start to close and reverse our bias essentially. So coming into this week, I do once again favor gold to the upside. Although I still have a kind of bullish bias on the dollar, I do think that we are seeing this kind of flight safety quality in gold, and I would not want to be short gold. So heading into next week, any pullback in this market is viewed as an opportunity to look for bullish breakouts. I'm going to be looking up towards the 2030 area as a max profit taking zone. We get into this area, this is where I'd be looking for any short-term opportunities. Of course, not looking or talking about longer-term buying opportunities. I'm talking about a short-term trade next week. The 2030 is the area I'd be looking to exit any of those short-term trades. And if we hold this and we hold this and we bounce and we pull back, especially if we test this high over here, kind of broken resistance turning support in the 1930 area. This is the second place next week. I would be looking to potentially buy gold on the dip for a short-term buying opportunity in this market next week. Next is silver. Now, I do prefer gold because out of the two of them, gold is the asset that really has that flight safety quality. Silver, we have seen it rally, but the problem is with a stronger dollar, if the dollar starts to turn higher, I mean, don't forget last week the dollar just went nowhere, and this helped gold and helped silver to push higher. But especially silver, silver may struggle to go higher because it just doesn't have that flight safety quality that gold does. So out of these two, I do favor gold longs to the upside next week. However, on balance, any pullback in this market is viewed as a potential opportunity to look for bullish breakouts into the 2430 area. And if we continue to pull back and we test the 2230, this is the second place next week. I'd be looking for a short-term buy opportunity in silver. Just bear in mind, one thing to really keep in your mind here is if we get a serious risk-off event, we see stocks breaking down and volatility spiking, Silver is likely to suffer in that scenario. Hence why, if I'm going to be trading one of these two next week, I would prefer it to be gold. Because again, like I said, gold has that safe haven status. So silver was a market that did actually trade into its upper bound last week. I once again would not want to be short silver this week, but I can't stress enough, if we do get a risk off event, you could be on the wrong side of that if you are looking to be long silver. So personally, I'd rather filter silver longs next week and focus only on gold longs if I'm going to trade either gold or silver if the opportunity arises. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, forex, and commodities.